Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to go over some energy plays. There's energy service, oil companies, natural gas companies, and I even threw some coal companies just to look at the charting. The charts look pretty compelling on a long-term basis. I'm just looking at these from a long-term perspective. What we want to see are long-term downtrends or long-term kind of sideways accumulation phases that are about to break. When they break these large downtrends or long accumulation phases, it usually means that we're starting a new uptrend. And these uptrends can be very large because the larger the downtrend that you break, in terms of how long it lasted and how big the pattern is, usually means that you're going to have a very large structural move that's coming after the downtrend break. So, what I want to see is I took a whole bunch of different companies. Some companies have already broken and they're already starting their way up. Others are kind of lagging behind. And I was looking for a bunch of lagging companies so you guys can participate in some of the laggards. And it doesn't mean lagging performance. It means that their move is lagged behind all the others. Maybe they're high cost producers, and the ones that are low cost producers that can make a lot of money, maybe they move first. And then the higher cost producers kind of lag behind, waiting for the price to go up even more. So some of these are high cost producers. Some of them, I don't know the exact reasoning why they're lagging behind. They could just be slow movers in relationship to the others. So let's jump in. I'll give you my financial opinion and show you what I see in the energy sector. I do think that energy is going to be strong going forward. We're seeing the oil to gold ratio firm up, which means that oil's outperforming gold. When we see that, that means that we're probably in the beginning stages of a commodity bull market. Usually energy goes first, inflation works its way through the system, and then gold and some of these other minerals start rocketing at the back end. So let's take a look. What I have pulled up here is I've got Northern Oil and Gas and Enerplus Corp. These are both energy companies. Think of it as exploration and production companies. If you notice, we've got a big long downtrend line. We broke that. And then we have another smaller kind of accumulation phase at the bottom. And we're about to break that to the upside. So I think once we break all this, I think we're going to see a good size move higher. It looks like Enerplus is also doing this. We broke the downtrend. It did a little back test and we're starting to move higher. So right now is the one, this would be the time, I think, to start looking into a company like ERF or NOG. We've got Equinor, EQNR, looks like it's almost out of its pattern as well. It's coming right to the top of it. And this is a very large pattern, so the projected move would be quite large. I would say probably at least 100% move. We've got Tetra Technologies that came all the way down to a point, and that thing's already kind of taken off. But that one looks pretty good to continue higher as well. I think the energy service companies are going to be lagged behind the exploration production companies because the exploration E&P companies, they're going to have to make money, and then they're going to start ramping up their drilling after the price goes up and they start making more money. So the service companies are usually lagged behind. So that's one that you can kind of look, or a sector to look at is the energy companies and energy service companies. Here's an energy service company, massive move lower. We're still in this big pattern. I'm just waiting for this thing to kind of turn around, and then I'm going to be buying into Helix Energy Solutions. Crescent Energy Point looks pretty good. It looks like we're trying to put in this like bottoming pattern. It's about to break it at any second. So I'm willing to bet that this one's going to start to outperform here pretty soon. Is Crescent Point Energy. Here's New Vista. New Vista's got a nice clean chart, big old downtrend break. It broke out, it back tested, and now we're moving higher. Ovintiv, another one that's been going on down. It broke out of its little descending wedge pattern to the upside, and it looks ready to go higher as well. So that one looks very good. Neighbors Industries is an energy service company. They do lots of land drilling from what I understand, and we've got the descending wedge, and we're coming right to the tip of the descending wedge. where we're about to break at any point. Remember, energy service companies are lagged a little bit. Matador Resources, another one that looks like it's got a megaphone type pattern. We're coming up to the top of it. It could be like a cup and handle pattern almost. And we could potentially break this to the upside eventually, probably pretty soon. We've got Gazprom. Gazprom's looking really good. It's got a megaphone pattern. It's breaking it to the upside right now. So that's got a long way to go in terms of upside. Tellurian, looking at it from a big long-term perspective, big old pattern if you look at it zoomed out. And I bet you when we break this upper downtrend line of this pattern, you're going to see a big move to the upside after that breaks. We're not quite there yet, but it's coming. We've got Pado Exploration and Development Corporation. This guy's got like a bowl-shaped pattern, and it's starting to break to the upside. Then we've got this weaker trend line above it, but this thing looks ready to go as well. It looks very good. Tellurian on a short term, if you zoom in on this right-hand side, it's broken its downtrend line, and it's back-tested or retested, and it's moving higher. So that looks really good. It's in an uptrend right now. So TELL looks great. SM Energy, I kind of took a medium perspective, a 5-year perspective on it. This looks like a cup and handle pattern that's developing, and we're going to probably launch much, much higher from this cup and handle when it breaks. Give it some time. I think we're probably going to get up there and break through it eventually. Centennial Resource Development, another one that's putting in a big, looks like a shoulder type pattern. It's going around a little bit, and I bet you we're going to move up quite substantially after we break out of the $7 range. And then Recon Africa, another one, you draw the trend line in. It's still above its upward trend line. It's basically coiling up to a point, and we'll see which way this thing breaks. I would assume it's going to break higher given that it's an oil company and oil's been moving on higher. So hopefully that's the case. And this one is extremely volatile. Volatility means you've got the bounce and the step. It also means that when you get knocked off your feet, you can fall pretty hard. And we also have some coal companies. So I've got HCC, Warrior Met Coal. You can tell that this guy's breaking out to the upside, and it's doing a retest right now. This is probably going to have a big move to the upside for Warrior Met Coal. China Shenhua Energy, which is their largest coal company, you can tell that this thing is putting in a nice downtrend line that's breaking right now. It's probably going to move on higher. Again, I don't know. You guys can do whatever you want with this information. I'm just showing you the setups. NACO Industries, NC, another one that's got a nice pattern developing, very large buying pressure, small selling pressure in this little pattern right here. And I think we're going to break to the upside. NACO Industries, from a big long-term perspective, back in the 80s, you can draw it all the way down. It came up. It's coming back to retest, and I bet you we're going to see this big move higher at any second. But that's what it looks like on the big long-term, and this is the short-term. We've got Yanzhou, however you pronounce it, coal mining. You can see that this thing's got a little bit of some sideways action since the mid-2000s. It's probably going to break to the upside, and I threw another Reconnaissance Energy Africa in there, and how it's all the way to the tip here and about to break to the upside. So those are the companies that I was looking at. I was just kind of looking at some. They're all energy companies. Again, I'm more into, I think, physical precious metals, royalty companies, energy companies. And I'm trying to kind of focus a lot of my money on companies that don't have energy inputs. Like mining companies, energy costs are an input to their process. And when energy prices go up, their margins can get squeezed depending on the price of the metal. Now, I expect the metals to go up, and to go up quite substantially. If there's a way that you can play the metals with just volume and price, which is a royalty company, I think you kind of take that input cost risk out of the equation. And that's kind of how I view it. The physical metals is the easiest and lowest risk way to play it, because even if you're in an energy company and energy goes skyrocketing, what are the governments going to do? They're probably going to tax them. They're probably going to tax the heck out of them, because I mean, governments they only have what they take from others. They either take purchasing power out of the currency or they either take it from taxes of other people. And oil, obviously, they've got a huge target on their back. And they're going to say emissions or whatever excuse they want. They're going to bring executives in. They're going to question them why oil prices are high, even though they don't set the price. And the policies that they put in place directly increase the price of energy, which is basically not allowing people to drill for oil and natural gas and other fossil fuels. So we're probably going to do that whole shenanigans. And metals prices held in your hands, you kind of skip out on everything. You don't care what they do because they're going to put in really retarded policies. And those policies are going to raise the price of energy. The increasing price of energy is going to raise the cost curves of all these metals. Raising the cost curves is basically raising the floor of the metal prices all higher. So basically, they're ensuring that we're going to get massive inflation, not only from the money printing aspect of them printing and spending on these trillion-dollar programs on overly expensive energy solutions, which, in my opinion, and I know everybody, they think renewables are the wave of the future. We'll see how much renewables cost after all of the metal prices go up and all of your fossil fuels go up. Because if you're going into these complex solutions where you're extracting copious amounts of minerals for whatever you're trying to implement, I don't think it's going to bode very well when it's great when commodity prices are at 100-year lows. What happens when we're at 100-year highs? The costs of all these things are going to skyrocket because they're complex and they're mineral intensive. So if the solution that you're going to put in place requires a copious amount of copper and nickel and rare earth metals, and all these things go up 10x, what do you think the price of those are going to go up? Probably over 10x. And then you got to transport all this stuff around. You got to link it all together. And then you got to figure out energy storage solutions. And energy storage solutions means redoing your entire grid. If you redo your entire grid with energy intensive things, it's going to cost a lot of money and it's not going to be cheaper. So one way that you could look at this is the cost of energy, I think, is going to increase no matter what. What are the lowest cost, best solutions? Well, uranium's pretty good. I can tell you that. I think coal in the short term here is probably going to kill it because it's an alternative. And when prices start to get out of whack, what people are going to do is we're just going to vote these people out of power. And we're going to put in other people who are more energy, we'll call it those that are more pro-energy with lower costs. So whoever those people are, maybe they're against, I don't know if they're necessarily going to be against climate change, but, and remember, exchanging climate change for environmental destruction isn't a good trade-off either. Because I don't know how you're going to, I don't see a renewable world being sustaining. And the reason I say that is, where are we going to get all the silver? Where are we going to get all the copper? Where are we going to get all this stuff? Are we just going to dig a bunch of holes everywhere and Swiss cheese the earth? We'll see. We're going to go digging under the ocean and polluting our ocean. That's not a good trade-off. So we'll see what happens. But I think we're going to hit an energy crisis. I think these guys are all lining up. You can tell by the downtrends and the patterns that are developing that we're about to all break to the upside on everything. So to me, I'm heavily invested. I've overweighted energy in my portfolio. I've done royalty companies for my metals. And hopefully that plays out and that I've positioned correctly for what I see coming in the future, which is much higher energy prices. If you guys like this content or content that's similar to this, subscribe to the channel if you haven't already. Give me a thumbs up, and thank you for listening. This is Finding Value.